Hello, everybody. It's Hammer with your Vetted VA weekly mortgage market update. Today is December 21st, 2022. We're coming up on the end of the year. Things get very quiet in the mortgage markets. And I'm glad to hear that. I'm glad to see that. I always like it to be a little quiet the last couple weeks of the year. So today I am joined by Lindsay McCoy. Thank you for joining us, Lindsay. How are you today?
I'm great. Thanks for having me. I'm excited.
You could tell everybody the truth. You're home with two sick babies.
Okay. Yes, I am home with two sick children that both woke up sick this morning. So that's really exciting before Christmas.
But you're still very chipper. So that is awesome. And please tell us a little bit about yourself, your experience in the mortgage business, what you do with Vetted VA.
Yeah, my name's Lindsay McCoy with Care Finance Group. I am a proud member of Vetted VA. I absolutely love being a part of this community because of the opportunity that it gives me to serve veterans who I love and cherish. And I think they deserve a much better level of care in the real estate industry, which is why I'm part of Vetted VA and committed to our mission.
Awesome. Well, thank you for joining us today. For those of you that are here live, please go ahead and chat us up in the comments. I know it'll get a little quiet. We'll have less people on than normal generally around this time of the year. But if you are here, go ahead and say hello. Make sure that you tell us your name because I usually just see Facebook user and I don't know who you are. If a lot of Facebook users out there, it'd be a rough guess. If you're watching us on the replay, I know not everybody can make it live. We're here to help you anytime, any day, though. So if you are here, just give us a hashtag replay. Let us know you're watching on that replay. If you do have any questions or comments, please let's go ahead and hear those. And even if you're watching on the replay, make sure that you do ask those questions or make those comments because we do follow this thread all week. So if you guys do have anything to share, that's how we do that. Otherwise, let's go ahead and just do our quick rate recap, talk about where rates have been since last week. Overall, rates improved a little bit to end the week last week. If you all remember, if you may have been watching, we had the Fed meeting on Wednesday. And we had our session here. Our show was right before the Fed meeting. And I said, depending on what the Fed says, we could see rates improve a little bit. What's funny is that the Fed chair, Jerome Powell, basically came out and said all the things that should have caused mortgage rates to get worse. And yet mortgage rates got a little bit better. It's kind of one of those cases where the Fed said, hey, we're going to continue to raise rates into 2023. We're probably going to have to keep them up longer than you guys think. And everyone said, nah, we don't believe you. We think basically markets believe that the economy is going into a recession in 2023. They think the Fed's going to have to basically start to slow down any increases and give back sooner. So all of that kind of helped with the idea that we saw rates just get a little bit improved. Generally, if you're out there shopping right now, again, this is not an offer to lend and there's no APRs, so this is just an average starting point for y'all to have some comfort when you're out there shopping. But generally, VA rates are going to be in the high fives to the low sixes, depending on your credit score and your unique situation. If you're not going with a VA loan for any reason and you go with a conventional conforming loan, as we call those, they're going to be more in the lower sixes, maybe the mid sixes, depending on credit score and down payment requirements. So that's kind of just an overall idea of where things are at. We saw things improve maybe about an eighth of a point or 0.125% last week. But then this week, we gave most of that back and rates kind of moved back up a little bit over the last couple of days. Some stuff going on overseas, very, very boring things that I won't bore you guys with the Bank of Japan and what they did with yield manipulation and all kinds of funny things. But that affects rates here in the United States. So that's kind of where I've seen things. So, Lindsay, what have you seen in the last couple of weeks?
I mean, as far as rates go, exactly what you've said. The thing that I've seen change the most, I think, in the last few weeks really has been consumer confidence. I've seen an uptick in purchase applications and pre-approvals and people kind of, for lack of a better term, rushing to get into contract because they believe that the economy is headed in that direction, as you mentioned, next year. So, and they want to buy a house before that. That's kind of the general consensus that I'm hearing. People want this, we'll call it a downturn in where rates that we just came from. They're like, oh gosh, I have to buy right now. So consumer confidence in interest rates and wanting to get out there and enter the purchase market again. So
yeah. Yeah, I agree with that. And also, a lot of people have come to terms with the fact that this is where rates are going to settle in for a while. And they're not going to drop down to 2.5% or 3%. People were afraid rates went up very quickly. What if I buy a house and rates go down very quickly? And this is one of those situations. Unfortunately, rates did move up very quickly, but they're going to move down much slower and probably not down nearly as far as everybody would like to see.
Mhm.
What do you, I mean, you can see on the screen, we've got the little banner up there. We talked about this a little bit last week. Do you see an advantage to buying a home now that rates are higher to at least be, there's less bidding wars? We're not seeing these ridiculous over asking price situations where a lot of members were getting discouraged. You put in an offer after offer and you just don't get that offer approved, especially with some of the myths out there against the VA loan. Are you seeing that it's a little bit easier to find and get find a home and to get your offer accepted now in your market?
Absolutely. I will only speak to my market, but in our market, it is incredibly easier to get into a home. There is a large percentage of homes that are still selling at list or a little bit over list, but there's also a good chunk of houses that are selling under list. So sellers are more willing to give seller credits. They're more willing to not be, we'll call it discriminatory towards loan type. It is much easier. And again, I think that bolsters consumer confidence, buyer confidence of, gosh, I can go out and put in an offer and I'm not going to, get ripped apart, because it was an emotional journey for the last few years for a buyer. So it's been good. It's been a good few months. I know it hasn't been great on the rate side, but as far as a buyer going out and getting in contract and being able to negotiate repairs and negotiate seller credits, if that's the case, just have a better buying experience emotionally, it's been a positive movement.
Yeah, I agree. And what was your market one more time? Just remind us, where are you at in the US?
I'm in Sacramento, California.
Okay. So, and listen, when it comes to housing, I don't think there is anywhere as crazy as California. And in fact, Sacramento, I mean, I have a lot of clients that are out that way, members of Originator Success, and it is, what do you want to say? Maybe the last 5 years, home prices have just, a lot of people, even from the Bay Area, have migrated out to Sacramento. Yes. A lot of, Roseville has gotten huge. Just that whole area.
Yeah, I'm actually in Folsom, and we have a ton of Bay Area transplants. And a lot of that spurred because of COVID and because of work from home. And they're like, gosh, well, I don't have to pay the super high prices of the Bay Area. I can come up to Sacramento, get a price that's the same size for half the price. That's still true, even with rising prices. But yes, California's a crazy market in general. But it's been a nicer few months for buyers.
Yeah, it's things have settled. And so do you think that again, we don't know the future and we can't tell everybody that, everything's going to be okay and magically it will, but do you think that we're in a situation that there might be a housing bubble, and why or why not?
That's a great question, and one I get asked all the time from prospective buyers. I personally do not think that we're in a housing bubble. That's because of inventory levels and historic inventory levels. If you look back at the crash, even in different crashes throughout history, we still had more inventory for sale than we do today. And let's be honest, we have a much larger population today. So the demand for housing exceeds what we've ever seen in past crashes. So that's why I don't think we're in a bubble, because we still have a demand. We're still in a supply and demand market.
Yeah. And we've talked about this before, but again, there's new people watching. So I'll reiterate for myself, this is a very unique market because we have something that we never had before. So generally when I share my screen, I show you guys, there's a little, fulcrum, and it's affordability, what people can afford. Let's say that that's the fulcrum. That's your center point. We're going to draw a seesaw, and I'm going to use my hands today because I didn't load up my Remarkable. So we've got our little seesaw and it starts on that fulcrum of affordability. That doesn't generally change. People are not going to see wages go tremendously higher that they can afford a lot more. So what happens is when rates went down very low, that fulcrum pendulum pushes up. And now what happens is rates are on one side of this pen and prices are the other. So when rates go down, prices can go up. And that's what drove those crazy bidding war situations and over asking price situations, and just such a strong demand, not enough supply. And that's what happened. So what should have happened is that when rates go up, we should have had prices start to come down. However, what happened instead is a little unique. And it went like this. Instead of going up and down, it kind of went like this, and rates went up, and yet pricing kind of just stabilized. And the reason for that is what Lindsay said. There's still not nearly enough inventory. Now you'll find builders have gotten a little bit more eager to sell properties. They're, getting some new homes. Those have gotten a little bit easier to get your foot in the door. But as far as existing home sales, there's still a huge inventory problem. And the other big situation that's driving that is we've had rates that people got in the 2s and the 3s, and they're just not moving. Normally, everything is cyclical. People would buy a home, maybe have new babies, maybe they, get a new job, or they want to move to a different area. They sell that home, they buy a new home. Well, when you have a home now at 2.5%, 3% interest rate, you can't afford to double, to go from let's call it a $300,000 home to a $500,000 home when you also tack on that interest rates have gone from 3 to 6%. So everybody is staying in those homes now, which is continuing to drive that supply issue where we don't have more houses on the market. And that's why we can't have any kind of a housing bubble or a housing crash, because that's not going to change overnight. Do you agree or disagree, Lindsay?
I absolutely agree. Everything you said is absolutely on point with inventory as how it relates to interest rates. Something that I'm also seeing very recently is we're having some legislation and some law changes in California as far as building accessory dwelling units, ADUs, on your property without having to get rezoned and things like that. So in some cases, you can build 1 or 2 of those on your property without having to pay any major fees to counties and cities in California. So we're having a huge influx of people asking to borrow money on those homes to build separate units for older children or for parents, aging parents, because the cost of elderly care is so incredibly expensive now. They're just bringing parents in and hiring a nurse to come home. So we're seeing that. So people are staying put for longer than we've probably seen anywhere in the last 30 years. I think people are going to stay longer, and we're not going to know those numbers for another 5 to 10 years.
Yeah. So the whole point there being everybody is a fantastic time to buy a home. That's why we're not in a housing bubble. And remember, we're going to talk about rates again. We'll kind of swing back over to there and we'll do our rate forecast. But one thing is, if you are buying a home now and rates are a little bit higher, like we said, if I find my little thing here, it gives you the advantage of being able to maybe get your foot in the door and get a home with rates slightly higher today. And then when rates go down, and why are rates expected to go down? Because we're expected to go into a recession. The Fed has driven rates higher. They don't set mortgage rates, but they affect mortgage rates. And the Fed's activity of raising policy rates has driven mortgage rates higher, along with car loans and auto loans and every other kind of consumer loan and credit card fees and rates and all that stuff. So anyway, that's going to come back down, though. This is a temporary situation, temporary in the long term, but probably maybe 6 months to a year that we're going to see these rates, and mortgage rates will come down even before the Fed funds rate comes down again. So anyway, we do expect to see rates come down. When they come down, there is a wonderful program that is available to our vets. You want to tell them a little bit about the EARL program?
The EARL program, yes. This is a pop quiz too, because you didn't tell me you were going to ask me anything.
That's all right. Here, I'll make it easy then. The 2 points we want to make sure that, so when let's say somebody closed on a house a couple of, 6 weeks, 8 weeks ago, and they might even have been in the 7s, and they're like, this really sucks. It always happens to me. The timing was terrible. I ended up with a rate of 7.25. Now rates are 6.25. Can I refinance? And the answer is not yet, because with your EARL, right?
Exactly.
Go ahead.
Not yet. With an interest rate reduction refinance, you do and a VA to VA. The benefits are you don't need appraisal. You don't have to show income. We just need to verify a few things, current employment, things like that. But you do have to have made Wait 6 months and wait 210 days before you can actually take advantage of that refinance. The reason for that, people always ask this, the reason for that is that they want to make sure that you're not churning your loan. They want to make sure you're not just refinancing over and over and over again and getting additional fees added to your loan. So they're normally very low cost. To do that, you do have to also lower your interest rate at least 0.5%.
Yeah. Yeah. So that, and for some people that would happen even now. Now, the good news is if you did buy a home in the last couple of months and you're thinking of refinancing, you will very likely see rates that are better than rates today 5-6 months from now. There's a very good chance of that. Again, we can't guarantee anything. We don't have a crystal ball. The reason, though, that we think rates will be a little bit better, and we'll get into the rate forecast piece on this, is that if the economy does slow down, if we go into a recession, that is going to bring inflation down. The reason the Fed has raised rates so dramatically has been to curb inflation. Anybody that goes to the grocery store can see exactly, what's going on with inflation. And once that starts to slow down, then we can see things normalize. We're also likely to see rates improve a little bit on the mortgage front. So patience, even though you're making a higher payment right now, it should pay off, and you should be able to refinance into a much better rate in a few months from now. So don't let that discourage you. Keep your chin up. As far as where rates will go in the most immediate time, we really shouldn't see rates move much between now and the end of the year. Conventional conforming rates, like I mentioned, if you're not getting a VA loan for some reason, or we'll call it the low sixes, maybe to the mid sixes. For a VA loan, you're generally looking at the high fives, maybe the low sixes. And I don't think that's going to change between now and the end of the year. Lindsay, what about in your experience? Do you think we'll see any big movements in rates between then?
No, I don't. I call this government vacation time. So we don't see any major swings because no one can give us any shocking news for our economy during this time because everyone's on vacation.
Yeah, very much so. And what happens, everybody, we've kind of shown this before. I'll share with my screen with y'all so you guys can get an idea of all that crazy stuff that we look at. So this is what we call a Japanese candlestick chart for the basis of mortgage rates. They're called mortgage-backed securities. And we monitor this, I monitor this daily. I report on it daily. And what happens is this is driven by trading, and traders tend to take the last couple of weeks of the year off as well. So we see a lot less trading volume. There's a lot less activity on Wall Street. Because of that, we see a little bit of choppiness, meaning rates can jump up or down 1/8 of a point here and there, like we saw between last week and this week. But overall, it tends to stay very much the same over the next couple of weeks. Everybody won't get back to work until after the new year, and then we'll see a lot more activity in that time frame, and things will kind of settle in there. So that's generally what we see happen. So awesome. Well, Lindsay, is there anything that you'd like to leave everybody with this week? Any words of wisdom or anything else that you think I missed?
I think that you covered everything wonderfully. I would just want to leave everyone with have a wonderful holiday season and a wonderful New Year.
Yes, I have a tree in my house, so I'm going to say Merry Christmas, everybody. If you are not celebrating Christmas, Happy Hanukkah, Merry Kwanzaa, Happy whatever it is. Have fun with that one too. Yep, all the things as people say. So thank you, everybody. I will be here next week with a new guest. We'll see you next Wednesday. And let me just see. I see some comments to see if I missed anybody. Thanks for joining us, Chris Gorman. Thank you for joining us, Deidre. And here's a question we'll hit before we wrap up. It says, is 2023 going to be a bargain year for buyers? Lindsay, I'm going to let you go first, and then I'll wrap up with it.
A bargain in the sense of you'll have more negotiating power with your sellers, where we do not anticipate home prices to suddenly drop and all of a sudden you're getting a $300,000 house for $100,000. We do not anticipate that, but it is a bargain in the sense of what we just came from way over asking to, hey seller, I would like, to offer you list price with a $10,000 credit. And I would like you to fix, that handrail on the stairs. We have not seen that in the last couple of years. So it's nice to see now.
Yeah. I very much agree with everything that you said, Lindsay. The one thing I will say is there's definitely different pockets across America, like Lindsay's in that California market. So now some areas you can read some headlines, where prices have crashed in California. Well, that's also like certain price ranges in the millions that there's less buyers now. There's a lot less demand. So there's misleading kind of headlines that can make you think that we're in an area where, buyers are going to be able to jump in there. But at the end of the day, it really comes down to, as Lindsay said earlier, it's supply and demand. And there's still strong demand at these rates. And there's not more supply. I mean, in my market, I'm in Western North Carolina. We have not seen much of a slowdown at all. Houses are still not on the market for very long. They still are going for asking price and above. And we're still, if you want to build something, it's going to take you 2 years to get your hands on a decent builder. So because of that, those are the things that we don't see a tremendous amount of bargains. But like you pointed out, we're also not seeing 20% year over year price increases, thankfully. And that in and of itself has created what I'll call a bargain. So very much. Thank you. Well, everybody, Merry Christmas. I'm going to wrap it up then. Lindsay, thanks for joining us.
Thank you.
Bye-bye, everybody.